So today we're going to be talking about multi-time frame analysis. Multi-time frame analysis. Now, there are actually many ways. When I mean many ways, there are many ways to actually analyze the markets. Let me see. So I said there are actually many ways to analyze the markets, which involves combining different time frames. So you might ask me now, someone asked the other time, can we analyze the chart with just one time frame? And I said no, right? Now this is it. Understanding how to use multi-time frame analysis will help you find trading opportunities and also enhance your entry and exit strategy. Understanding multi-time frame analysis will help you enhance your entry and exit strategy. This is going to help you very, very well. Mostly where to place your stop loss and your entry and everything. Multi-time frame analysis is going to help you do that. It's an approach that a lot of traders use in different markets. Very, very important that you actually understand the concept of multi-time frame analysis. It involves what's it called? It involves scrolling through different time frames to do what? To get a clearer picture or a clearer detail of that particular what's it called? Of that particular pair. To get a clearer picture of that particular pair. Hang on. So most people use different type of multi-time frame analysis. There are different ways you can analyze the market. All right, but I'm going to simplify our own to 3 time frames. Now, this 3 time frame method has been used many times by a lot of traders, including me. Yeah, it allows you to instantly react when price changes in the market, and it involves you combining 3 different unique time frame that is suitable to you in particular. Now, these 3 different unique time frame is not default. Like there is nothing like this is the particular time frame you are going to use. No, depends on the kind of trader you are. You'll be able to understand the particular 3 time frames you should be combining. Yeah, it should involve the particular 3 time frame you should be combining depending on the kind of trader you are. Right, so let's get right into it. Before I move, as before I go forward, give me a moment, please. Okay, sorry. Now before I go forward, I actually made a tweet about this few what's it called? I made a tweet about this few weeks or a few months ago, where I said you only need 3 time frame analysis and 3 time frame to analyze the market. And the first time frame, your first time frame, number 1 time frame, first time frame should your first time frame should be the time frame where you build your bias or where you determine the main trend. The second time frame should be uh, second time frame should be where you mark your structure or you determine the current market bias, anyone. current market structure, and the third time frame, that is where you find your entry and exit. That's where you find your entry and exit. Now, with everything I've been teaching you guys on this basic technical analysis for the past 1 month, or let's say 4 weeks at most, or 5 weeks anyway. With everything I've been teaching you guys for the past 5 weeks, yeah. This right here covers it up. This right here covers it all. Now, the class from today is going to be a little bit hard in the sense that the method of teaching is going to be switched. It's going to change. So be ready to work harder than before. All right, be ready to work harder than before. And for some of you that have been missing classes because you want to learn one particular strategy in the future, which I'm here to teach you guys, you should have actually started with this one so you can actually build that strength to keep up. You can actually build that strength to keep up. I always say this: if you do well, you are not doing well for me. You are doing well for yourself, not me. I'm doing well by myself. So I'm not a retired trader that is now looking for mentorship money every week or every month, hosting it every month to put food on my table. Hell no. This one I'm even doing once in a year. So I might even stop it. I'm still an active trader and I'm making serious money from the markets. So if you want to do well for yourself, you want to help yourself, you have to put in the work. You have to put in the work. You don't need to like be lazy or whatever. You need to put in the work. Study hard. Yeah, study well. During my first classes, the first ever students I had, that was the FZ and engineering set about 3 years ago before I stopped mentorship and started just last year again. That time, I won't come and be explaining all these things and start showing you the chat. Once I give you something like this, I explain it like this. You're just 20. Once I give you something like this and I explain it like this, go to the charts. Create a detailed explanation of each of this on the live chat and send it to me. Without me showing you what it looks like, I will just explain it and I'll tell you, now go to the chat and create a detailed breakdown of a particular pair. Start with your first time frame, second time frame, third time frame. I want to say it. You fail, you go back and do it again. I was not even giving them fish or or giving them bread and butter like I'm doing to you guys right now. So you guys are kind of like very, very lucky. The fact that I'm breaking down everything, showing you on live chat, everything. It's actually, you should even outperform them. Because this is me even trying to make you guys lazy, actually. But let's continue. So I said the first time frame is the time frame where you determine the main trend. The second time frame is the time frame where you get your current market structure, and the third time frame is what is where you enter the markets. That is where you enter and do what and exit the market. Now, when I mean determine the main trend, this should be a particular time frame where you just open the chart. Yeah, you just open the chart and boom, without anybody telling you, oh, this pair is in an uptrend. Simple. This pair is in an uptrend. The next thing you want to do is you can either mark out your key levels on this higher time frame or you even leave it. Most times I don't even mark key levels anymore on higher time frame. But then you can either mark out key levels. Okay, this trend is an uptrend, and this is what it has been doing. When it takes a high, it comes back to retest that high before bouncing up. Okay, I'm seeing it now. When it takes another high, it comes back again. Bounce. Okay, I've seen it now. When it takes another high, okay, since it has done something like this, it has done something like this, it's doing, then it has taken this high again. So technical analysis only tells you what has happened in the past, then we use it to know what will happen in the future. So since a particular pair has been moving like this, it breaks a high, come back to retest that high, bounce. Breaks a high, come back to retest that high, bounce. Now it has recently break a high. It's a simple common sense something. You are expecting price to come back to retest that high, right? And bounce. Now, that is you determine the main trend. Then you go down to a lower time frame. The reason I'm not mentioning a particular time frame now is so I don't get you guys confused yet. Then you go down to a lower time frame that is much more lower than this particular first time frame. All right, you go down to a lower time frame that is much more lower than this particular time frame. Now, what are you looking for? You are looking for the current market structure. Remember, I showed you guys what we call primary and secondary trends. Primary and secondary trends. The fact that this price has pushed up to the upside like this is an impulsive move. We will likely see what? We will likely see a pullback down, something like this. Do you understand? So price is not just going to go up, touch here, and start going back up. All right. So now when you go down to the second time frame to determine your current market structure, then you see that price has already pulled back. All right. When you see that price has already pulled back, the first time frame is bullish. Now price has already pulled back to retest this area on this second time frame. On this second time frame, you are seeing it on the what is it called? On that higher time frame, that is on that first time frame, you could see just one long candle like this, just one long candle, or two or three long. What's this now? Get out! Get out from here. Sorry about that. So let me see. I hope you guys can still hear me. Okay. So on this first time frame, you could either see price with a very long candle like this, and trust me, when you see price like this, you might not even know what to do. Yeah, when you see price like this, you might not know what to do. You might not. Okay. But when you see it like this, it gives you much more details on what to do here. It gives you much more details on what to do here. What does that mean? It's simple. When price starts pulling back like this, you've seen the current structure of the markets. The price is bullish. This is just a pullback, and price is coming down to a key level, the same type of key level that it has been retesting here before. I'm just using this as an example. There are some pairs that mostly they come down to, let's say, close to the low like this. So don't get confused and be expecting only this particular type of example. No, I'm just giving you an example. So it has come down to this particular key level. The next thing you want to do is when price actually got to this place, you want to see price take out what? This position. So that tell you that what? It wants to buy from this support and resistance, from this support level. It wants to buy from this support level. All right. That is the next thing you want to do. You want to check if price is going to buy from it. And if it wants to, on this lower time frame, you are likely going to see it here. All right, you're likely going to see here. Then price will now likely retest that area after breaking, right? You now likely see price retest that area and start buying. This is how the picture is likely going to be. Now, this third time frame is kind of like the most important part of it. This is like the most important part of what? Part of this entire thing. You've understood. You've understand the major moves. You've understand that price. You've understand the secondary move where price is pulling back. But there is one more thing that is very, very important. And what is that? Your entry and your exits. Okay. Now let me make it a little bit simpler for you to now understand. On this second time frame, when price actually got to this point and you are looking for some sort of change of character, yeah. Okay, let me not use that advanced. Let me use what I've taught you guys mostly. Okay, on this second time frame now, you are seeing this secondary structure here that is giving you a kind of trend line. Yeah, that's giving you this kind of downtrend. Then you can just decide to like mark your trend line from this point, that eye, you mark it down, right? I'm trying to use most of the things after you guys. Then we'll go to a real life scenario and check it out. So let's use this one first. Now, you've seen the current structure, the current trend, price is in a downtrend, but it is not coming to this level to respect this level, right? It's coming to this level to respect this level. There are two things you can actually do here. The first one is when you go to this entry and exit time frame on this particular level, when price has gotten to this point, you will now start looking to know if price is going to respect this level. And how we know if price is going to respect this level? There are two things. First of all, it's either you get that change of character, and trust me, that change of character is going to lead to this trend line breakout as well. When price retests before buying on this lower time frame, you are looking for a candlestick confirmation here. You are looking for what? You are looking for a candlestick confirmation here on this third time frame, your entry point. Once you get a candlestick confirmation, it could be a money star, it could be an armor. Once you get a candlestick confirmation at this retest, because if you don't get that confirmation, the best thing is to leave the market, wait. But it is possible that price can actually break out, take out this high, and still come back down and continue going down. It is possible. We don't own the market. This is based on little steps that you can use to get an entry. First, you understand the major structure. Second, you understand the current structure. The price is coming down, giving us a pullback. Price is giving us what? It's giving us a pullback. Then now price has gotten to that key level on this first time frame. This is the key level here. The same key level is respected here. The same key level is respected here. Price has gotten to that key level now. So you are looking for a way to engage the markets. Then you see this change of character. Then price is pulling back to retest this trend line. What are you trying to look for on your third time frame? Entry and exit. Your entry candlestick confirmation around this point. You see an armor. Once that armor closes, the next candle open. You are taking your trade. The next candle open here, you are taking your trade. Then your stop loss is going to be below that key level. The stop loss is going to be below that key level. Then you target the previous high. That is going to be what? That's going to be our new. That's going to be what? That's going to be our target. You target the previous high because after price has already given us that confirmation, we are looking for what? A new higher high. Just 3 steps. The first one, understand the main trend or the direction of the market. Second time frame, you are looking at the current structure. You are working with the current structure of the market. The third time frame, you are looking for an entry. Now, if you don't even want to go through this and change your character, breakout and retest, you can't just wait for all this. Simple. The third time frame should now be this for you. Still entry and exit. All right. Leave the trend line. Let's say you are not patient enough to wait for price to break out from that trend line, because breaking out of that trend line is giving us more confirmation. Let's say you are not patient enough to price to break out of that trend line. Once you've gotten the current market structure, that is on your second time frame, you've gotten the price, the current price is actually around that key level. Next thing you want to do is, this is a strong support level. You want to see price on this third time frame. You are looking for what? Candlestick confirmation around here. Could be a bullish candlestick confirmation, anything. AMA, Morningstar, or whatever. You enter your trade from this point. Then possibly when it breaks out of that trend line, you still double your position if you want. Time frame analysis is something that is very simple in the market, but at the same time, it can be very, very confusing if you do it wrongly. Since the major market is bullish, now using time frame analysis, you can be able to get reversal trends. But I'm not going to talk about now because I don't even advise you to go against the trends for now. It's when you have to like be able to, you have to be very, very good enough to like follow the trend and catch trend before you can start thinking of trading reversals. For you to actually get your third time frame entry and exit, you have to make sure that your third time frame, that is your lowest time frame, finally aligns with your first time frame. Your first time frame, direction of the market; second time frame, the current market structure; third time frame, entry and exit. Now, what kind of time frame would you like to combine, and how do you combine them? This is how people combine time frames. Your first time frame, let's say you are a day trader now. Let me use day trading. If you are a day trader, your higher time frame could either be what? The 1 hour, H1. Then your second time frame, where you look for the current market structure, could be the 30 minutes time frame or 15 minutes time frame. 30/15 minutes time frame. Could be the 30/15 minutes time frame. What a hope. Then your lowest time frame, that is where you're now looking for that entry and exit, could either be the 15 minutes / the 5 minutes. Now you ask, why did I divide it like this? It's simple. This higher time frame now tells you that, okay, well, today I want to trade on the 1 hour time frame, and gold is going up. Okay, very good. Then you go down to the 30 minutes time frame, and you see that it has given us an aggressive move, and price is pulling back, giving us those internal structure, right? All those small structures inside that 1 hour time frame. That is, it has gone up, it is coming back down. This is what it is doing. All right, and that's this thing. On that 30 minutes time frame, you are a day trader. Then you are now going to go down to the 15 minutes time frame to now do what? To now look for the entry. Simple. You're going down to the lower time frame to check that 30 minutes time frame. Sorry, on this 30 minutes time frame, you have to make sure that price has already gotten to a particular key level. That is why they say trading is 90% waiting and 10% execution, which means when you go to the upper time frame and you mark your key levels, your medium time frame is where you now monitor price to do what? To get to a particular key level. Maybe let's say strong support. If price is bullish, you are waiting for price to pull back to a strong support before you can now engage. You're a day trader does not mean you will trade every day. Price might take 2 days before it gets to a particular support. But if it's the 1 hour time frame, of course, it's not even going to take that much days. It might actually take like maybe a day because it's the hourly time frame. The structure is much more faster than 4 hours or daily time frame. So you mark your key levels on that 1 hour time frame. Let's say price was still around here at the premium level, and you've already marked your key level. All right. What you have to do is wait. When price now gets to that key level, then you can now go down to that your entry time frame and find your simple entry. It is simple. It is those that 3 chart patterns. This is still the same thing, so that I'm not going to like start dividing all these things. Those are 3 chart patterns. Your H1 time frame, you've seen that full direction, whether it is going up or it is coming, whether it is doing what, whether it is going up or it is coming down. That is it. H1. This is 1 hour time frame. Price is currently at this place. Then you go down to the 30 minutes time frame. What are you looking for? The current structure. Then maybe the 30 minutes time frame price is here, and you already marked this area as a key level. Then price now start doing like this, giving you upward slope on the what's it called, on that 30 minutes time frame. Gave you an upward slope while approaching this key level here. Remember, you already marked out this key level here, and it is giving you this upward slope. What is an upward slope? That is a rising wedge, right? You are trading chart patterns this time around, no longer this support and resistance that I just explained. You should see how you can still combine everything together. You are trading chart patterns from the 1 hour time frame. You go down to the 30 minutes time frame. You are now seeing your price was at this level on the 30 minutes time frame. Then you are now seeing this move on that same 30 minutes or 15 minutes time frame. If you go back to the 1 hour time frame, you're not going to see it multiple like this. You might likely see 1, 2, 3 candles or 4 candles, something like that. But when you go down to the 30 minutes time frame, you're not going to see it clear picture that, oh, this is what this is forming a rising wedge. And a rising wedge will likely see what? A breakout to the downside. So you can either short the resistance, that is sell from this resistance key level here that you've marked out. There used to be a time when I used to do that. I will see a rising wedge. After I marked the key level, when price has gotten to a key level, I will start shorting using candlestick confirmation. Once price started selling and break out of that rising wedge, then finally it is retesting. I will still use candlestick confirmation again to continue shorting. I can get like 2-3 positions. Yes, it is possible. So on the 30 minutes / 15 minutes time frame, you are now seeing this rising wedge. Price has gotten to this key level, this resistance point, strong key level. And all these fancy traders will call it breaker block. Resistance. Price has gotten to this resistance here. Go down to your lower time frame, that's entry time frame, which is the 15 minutes / 5 minutes. What are you looking for? You are trying to see if price wants to reject from this point or not. If price is going to reject from this point, it's supposed to give you a candlestick confirmation. Your money is very important. Protect your money. Don't just jump into the markets like that. These candlesticks, these confirmations are very, very important. When we go to the advanced class, there's another form of confirmation again. But still, if possible, say, combine candlestick with that confirmation that I'll be teaching you guys later. So you get the candlestick confirmation here, then you start selling. Eventually, price respects it. It doesn't break out. Because you've seen the confirmation does not mean price must sell. It's just giving you that there's an higher probability of price selling. That is why we are going to do what? That is why when we are going to engage to sell too, because we think the price is going to sell based on the confirmation we've gotten, we will still use stop loss. What is that stop loss for? In case price decides to continue buying, stop me out of that trade. The idea and the analysis has been invalidated. I will go and look for another one. So don't think whatever I'm teaching you now does not have probability of losing. Everything, every strategy has it's losing days. All right. So after the candlestick confirmation, you sell from that place on the 5 minutes time frame, 15 to 5 minutes time frame. Why did I use 30 / 15, 15 / 5? If you get the proper chart pattern on the 30 minutes, it's still going to be showing you something similar on the 15 minutes. And still on that 15 minutes here on your lower time frame, you can just go straight to do what? To get your candlestick confirmation. Now, if the 30 minutes is not giving you that proper chart pattern, go down to the 15 minutes. You might likely see it there. Because the 15 minutes will give you more information if you're a day trader. Now, a swing trader, that is my type of people. If you're a swing trader, you'll probably be looking at the daily time frame. You'll probably be looking at D1, the daily time frame, H4, that's the 4 hours time frame. Then get your entry on the 1 hour time frame mostly, H1. This should be H4/H1 actually. H4/H1. Why your current market buyer should be H4, just H4 actually. This your main time frame should be the daily, and sometimes on rare occasions weekly, but not really that important. Mostly the daily time frame, not the weekly. When I want to start going into the weekly time frame, maybe I'm looking for a position trade, like all the trade I used to take last year, where you see me hold the trade for like 3 months, 4 months. Yes, those are when I look into the weekly time frame. But mostly swing trader, the daily time frame, that is where I get my main direction. H4, I'm looking for that current market structure, the one I want to work with. Main direction on the daily time frame is bullish. Yeah. And I go down to like the 4 hours time frame and I'm seeing bullish as well on the 4 hours time frame. Very good. What am I doing? Next, I go down to the lower time frame to look for what? To look for a way to enter this trade. And how would I have entered? I'll just wait for price on this 1 hour time frame. I will not likely see price do like this on the 1 hour time frame. It has gotten to this low, right? This previous strong low. Price is supposed to protect it since we're in an uptrend. So what am I looking for? Simple something. I'm looking for just change of character here. And this change of character is to tell us that what? This downtrend wants to switch to an uptrend. And why is it changing here? I expect it to change here because this is a strong low and I don't expect price to take it out. So I see the change of character. I wait for the next break of structure. As price got to this discount level here, I can just use candlestick confirmation. I buy to give us a new high. Simple. Just simple. There's nothing too complicated about this. When you understand that, okay, I'm a day trader. I have no business with this daily time frame or weekly time frame. I have no business with that. Your higher time frame, sorry, as a day trader, sorry, your higher time frame, H1, then sometimes H4, sometimes, not really that necessary, but just put it there so that you will not be like, I must not look at H4. Sometimes you can just view it, all right? You can just view it. But the most important one for a day trader is this H1 time frame. Entry 15 minutes, then sometimes 5 minutes time frame. But most importantly, 1 hour time frame. What are you looking for? The main trend of the markets. Now that your 1 hour time frame is not like the main trend. That is 1 hour trend. You are not going to use because you finally saw that daily is bearish. Daily time frame is bearish, right? You'll be like, I'm respecting the trend. I want to continue selling. And you are a day trader. You will not start forcing, you will not see as move up small like this. You will run, I want to sell. It will stop you out. It will move up again. You will run, I want to sell. It will stop you out. It will move up again. You will run, I want to sell. It's because you think you are following the trend. If you are a day trader, prices, then you manage to go and look at the daily time and you see this strong sell. That is even a good signal that the 1 hour should be bullish because on the 1 hour time price needs to pull back from this leg, right? Then on the 1 hour time frame, you are now seeing a bullish move like this. You are seeing a bullish move like this. Perfect. This is what you should be working with. Just this. Work with this particular trend. This particular trend is what you should be working with. Then from this trend, you can now go down to the current market structure, that is the 30 or the 15 minutes time frame, and look for what after you mark your key level on this 1 hour time frame, you go down to the 30 minutes time frame to look for when price is going to come down to those key levels. Why do I call them key levels? Support and resistance levels. Yeah, support and resistance levels. Sorry. Why do I call them key levels? Because these are areas where price is going to bounce or reject from. If we are in an uptrend, you will likely see price be breaking what? Resistance, retest it, go up to break another resistance, retest it, go up to break another resistance, retest it and continue if we are in an uptrend. Support and resistance is not only sideways. Any area where price finds a balance to reject, is a resistance point. Anywhere where price found um, um, a reason to bounce from is a support level. That was why even when I was teaching you guys chart patterns, I told you these lines below are what? Support lines that is stopping price from going lower. So you can even price can even be in an uptrend like this. Okay, 1 hour time frame is bullish. This is the trend line. Good. Then on your current market structure, you need to see that pullback that will bounce on that trend line. Once price has got into that trend line, then on your lower time frame, the entry time frame, you need to see the candlestick confirmation on this particular bounce here. You are looking for that bullish engulfing candle. You're looking for that morning star or the AMA pin bar. When you get it, enter. And price is going to give you a new high. You take profits, then you are waiting for price to come back again to bounce on that line. To repeat the same thing that you did here, the same thing that you did here, until the trend stops by breaking out. Then you can now start looking for ways to retest. And if the trend breaks out on the 1 hour time frame like this, if it breaks out on the 1 hour time frame like this, you will likely see it could be one straight. I explained this during the last time. Price can just do one kind straight candle like this, boom, and started selling. But you're not going to get the information well unless you go down to the lower time frame. Then when you go down to like the 15 minutes time frame, you will not likely see that price built up at least 4 to 5 candles, touch that trend line. Then if you go down to the 5 minutes time frame, you'll likely see some candlestick confirmation around these points before price sold. But on that 1 hour time frame, you can see one long candle come down, another long candle go back up, then rejected with one kind long wick and started selling. Now, your assignment today, based on what I've been explaining for the past 40 minutes or so, I told you it's going to become a little bit hard now because on Wednesday, we'll be treating the correction live. It's no longer those ones that will be looking at the group. On Wednesday, we'll be treating the correction live before the next topic. So your assignment now is I want you to give me a complete breakdown. And I don't need, wait, let me type it first. Choose any pair of your choice. Choose any pair of your choice. And when you choose that pair, and give me a up down analysis. Using the 3 time frame, using the 3 time frame concepts. Choose any pair of your choice and give me a top-down analysis using the 3 time frame concepts. Now, before you drop the assignment, I want you to at the top of let's say your first screenshot, yeah, make sure you submit it with 3 or 4 different screenshots, anyhow you want to do it here. But on all your screenshots, I want to know if you're a swing trader or day trader. Okay, let's leave this out. Next class, because this particular topic will still be discussed on the next class. That is now when we will now start knowing the kind of traders you are, the kind of trader you are while I talk. So when we now start putting all this together, and start trading together, you yourself will know if you are a swing trader or not, or a day trader. I won't be the one to tell you. When we start trading together using this particular concepts, I think we'll trade together like, let's say 1 week. Yeah. Using this particular basics, we'll trade together for like 1 week. Then we move into the next which is the advanced class. But we'll use everything we've been teaching, and three together first for like 1 week and see. So this assignment, it might be hard. I understand why, because I'm not showing you guys on the live chat. In fact, let me show you guys one on the live chat. Let me show you guys one or two examples on the live chat. But I'm not supposed to, but I've loved you guys to like do it yourself. Okay, let's see. Let's see. Okay, looking at gold here, you can see that gold is bullish. Let me just use one particular area that has played out already. So that I won't just go start looking for more. Okay, let me just mark out this one is this 2022. I don't think my lower time frame candle will get to this place. Let's use this area as key levels. Let's use this area. First, we have this. Let me use this area as a key level now. You will see price come back, break out, and rejected from this area too. I want to use this particular one now as a key level. This particular area as a key level. This is the daily time frame, right? Let's use this area as a key level. Then we'll go down to like the 4 hours. Go down to like the 4 hours. Okay. Price now just broke out, retested, multiple retests actually. So this was more like a consolidation. So if I'm even to use a chart pattern on this particular one, I should be looking at the bullish rectangle pattern, which is this. Should be looking at the bullish rectangle pattern here. Something like this. Now, if you check, you will notice that this pattern was not clear on that daily time frame. Daily time frame just showed us where price actually broke out and retested. Then here we are seeing the bullish rectangle pattern. On the lower time frame, if price should retest this level now, this is the 4 hours now. Then if I want to go down to the 1 hour time frame, let's say price retested this level, right? And I'm looking for entry. Now I want to go down to the lower time frame to look for entry. Okay, price didn't actually retest this. Yeah, but let's just say price retested this level at this point. On this lower time frame, what should I be looking at? For my entry, I should be looking at a bullish reversal candle from here. A bullish reversal candle from this point. That is what I should be looking at. Then I'm going to take my trade. This is more like a swing trade right now, but you won't see me take it on the higher time frame. That is the daily time frame. But on this daily time frame, this particular thing was not visible as it is showing me now on the 1 hour time frame. I won't even say it's a bullish rectangle. I will just see it as, look at it. I can't call this. I will just be like, and this is one small consolidation like this. This is just one small consolidation. So it's a step-by-step thing. Once I've seen this area, I mark my key level and I wait for price. Then I go down to like the lower time frame to get the current pattern of the market or the current structure. And on the 4 hours, I was able to notice that that was what the price is forming a bullish rectangle on the 4 hours time frame. because the 4 hours time frame is going to give you more details than the daily time frame. Then I now need to go down to like the 1 hour time frame to get my entry. Let me check one more pair. Let me check just one more pair. That's my network generators. Shit. This USDC share that we talked about last week is already going. And I did not take this trade. Funny. I think we talked about this thing during our last session when I was showing you this thing. I drew it when we were talking about wedges, which was why I forgot. I was not looking, I've not even looked at it this week. Oh, it's fine. It's another money wasted. I see the rising wedge playing out. If you watched the last video, you will notice I was explaining this, and the next thing we're waiting for price to break out from, right? Okay. Let me use this particular one now as an example. Okay. Now let's see. Let me go down to the 1 hour time frame. Let's day trade it and see. Let me start with the daily. The 1 hour will be our entry. Let's say we want to swing this USD First of all, we'll go to the daily time frame, right? As a swing trader, we'll go to the daily time frame to check what price is doing and where we are currently at. Okay, this is the daily time frame. What are we looking at? Key levels. Key levels. The price has rejected from this point. Is this pair bullish or bearish? You can see it is bearish. This is the last swing high. Price did not take it out. And this is the last swing low. So everything inside this high and low is internal structure. Okay. I've understood where price is right now. This is my key levels. This is the area I want to look at. It is high, this is the high, this is the low. It is bearish. Good. Then I want to go down to like the 4 hours to get the current structure of the market. Right now, we cannot see the current structure. As you can see how it is. It is just high and low. Then all these ones here are just consolidating. We can't get the current structure of the market of this particular pair. So we have to go to like a lower time frame since we want to swing it. What's going on? Why is the next one doing like this? Since we want to swing it, right? We have to go to the lower time frame to get the current structure. Now, on the 4 hours time frame, we can see the current structure here. It is breaking structure to the downside, which means this pair is in a downtrend on these 4 hours. On the daily, after this swing high and swing low, every other thing here was just consolidating. So we could not get the clear structure. Now, this is the 4 hours time frame. You see how the time frame is breaking it down now. This is the 4 hours time frame, and you can see low. This is the high, this is low. High, low, high, and low again. Now we understand that this is how price has been moving on this particular pair. It is in a downtrend. This is the last high, and this is the last low. So what are we looking at? We need to mark the last area. Since we are trading support and chart patterns, whatever it is you want to trade actually. Okay, this is the area where price has been rejecting. Price rejected here, price rejected here. You can actually mark this entire area like this as a support level. I mark this area as a support level. Price rejected here too. Let me use this current one. Price rejected from this point before breaking out. Two ways to trade this. Since price has gotten to this point, you have seen it. This is the current structure of the market. It is bearish. Then you go down to your 1 hour time frame. Let me remove this line so the lines becomes lesser. Then you go down to your 1 hour time frame. What are you doing on that 1 hour time frame? You are looking for your entry. That is what you are doing on your 1 hour time frame. You are looking for your entry. Since this was the last point price rejected from, so this one is acting more like what? This was a support level. Price bounced from, went back up, broke out, came back to retest here before it started selling, right? Now, finally, price is at this area again, at this support flip to resistance. What are we looking for? Candlestick confirmation. Let's see. Oh, here's an hanging man at the top of this support. And what do we see? See price dropping after the hanging man formed. Perfect. Using just candlestick what? Using just candlestick confirmation. Okay, let's say we don't want to use candlestick confirmation. We are too scared. Of course, you should not be scared, but let's just say you were too scared of shorting this area. You don't want to short this hanging man. You want to wait for a breakout and retest. Price broke out from this point. Did it retest? This was the area where it broke out from. In ICT, they call it sniper entry. Yeah, they call it sniper entry. The exact point where it broke out from here, that is it. Price came down a little bit. Let me put it well. The exact point where it broke out from, this is where you put your entry. Price came down a little bit, as you can see. This candle now was due to probably a news or something. 1 o'clock. As you can see, price just went up, tapped on it, and started coming back down again to sell. Two different ways you could have entered the market. And if you are a day trader, now let's see what day trading would actually give us. On the 1 hour time frame, we are looking for the current structure, right? Day trading using the 1 hour time frame. Okay, 1 hour time frame, current structure, price is bearish. You go down to like the 30 minutes time frame. This is day trading. Now forget about everything I've just explained using this swing. We are talking about day trading right now. This same pair. 1 hour time frame, price is in a downtrend. You see now, I don't care about what this strong key level and this one is giving us, that this daily key level. I really do not care about that one anymore. Since I'm day trading, I'm focusing on what? I'm focusing on this. I'm focusing on this particular 1 hour time frame. Price is in what? In a downtrend. I'm now going to start my key level, which is this level here, which is also what? Which is also this level here. Why am I marking this level? This is my area of resistance. This is my area of support. This was where price broke out from at first. That is after this rejection here. And if you trace it to the past, you will notice that price has been rejecting from this point multiple times. You can see more around this area. You can see it. Multiple rejections, multiple rejections, multiple rejections around this area. Rejection, rejection, rejection here, here, and here too. So this is also an area of what? An area of support and resistance. So this was the last area price broke out from and retested on the 1 hour time frame. So we mark the low, we mark the high, and on this low, this was the area price bounced from. And if you trace it, you are going to trace it to this rejection. This sweep too was a rejection. And if you keep tracing it, you are still going to be tracing it to more rejections in the past. See another one here. So this is an area of rejection as well. So we have the resistance point, we have the support point on the 1 hour time frame. Let me remove this. We don't know. Let's just say we don't even know what this pattern is forming yet. We don't know what this pattern is forming yet. Then we go down to the 30 minutes time frame to see, to do what? This 30 minutes time frame now is now going to be where we are now going to identify the current structure of the market. Remember, we've used the 1 hour time frame to identify the main structure, right? Then we are now going to use this 30 minutes time frame to identify the current structure. The current structure could either be the pattern, yeah, could either be the pattern or the current internal structure or secondary structure. So now on the 30 minutes time frame, we can see If you trade chart pattern, you can see this to become, you can see this as a rising wedge. You can see this as a rising wedge, right? You can see this to be as a rising wedge here. That is if you trade chart patterns. All right. You can see this as what? You can see this as, wait, let me address it well. You can see this as a rising wedge here. Yeah. If you don't trade chart pattern, you can see this as an internal uptrend. This is just a pullback. This is what? This is just a pullback uptrend. You can see break of structure here, break of structure here. It's a pullback from this level, and price will continue selling because we need a new low. All right. So when you see this as an uptrend, something like this, you need to understand that this is a pullback because the overall structure, that is your 1 hour time frame, has told you that this pair is bearish. So any pullback you are seeing is an opportunity for you to look for a way to join and continue the sell, follow the trend. Because we have aggressive move, pullback, aggressive move, retracement, aggressive move, retracement. So for you to actually get into this particular trade, you need to understand that this uptrend is just a pullback. So on this 30 minutes time frame, you are now going to see your current market pattern or current market structure appear very, very well for you. And as you can see here, you are seeing a rising wedge. So now that you've seen the rising wedge, we now go down to like the 15 minutes time frame. Remember, you are day trading. You are day trading right now. You now go down to like the 15 minutes time frame or the 5 minutes time frame. Let's say you got into the 15 minutes time frame and you're not getting much information. Let's see the 5 minutes time frame. Let's see the 5 minutes time frame. If you're a conservative trader, what are we looking at? Now, on the 5 minutes, this bullish engulfing pattern here, this bearish engulfing pattern, sorry, is not going to actually make me take this particular trade. Why? It's engulfed, but I need it to engulf more than this if I'm using this 5 minutes time frame based on what I've thought so far. I need it to engulf more than this. So this is not going to trick me into entering the trade. So I need another bearish reversal candle. So let's see. Okay, here we have a perfect money star. Perfect money star candle pattern. Just around that area of retest as well. That is when we now enter. Remember, price has already retested. It has not like dropped. We are still looking for opportunities. Okay, see the money star. That is where we now enter. Then we target what? Now, the reason why multi-time frame analysis is very, very nice is that your entry and exit points is now going to be very, very, like, should I say, refined. Because if I want to enter on this 5 minutes time frame, I'm no longer going to be using this invalidation zone. I could either use this particular eye here that led to this breakout. Then I'll target what the next support. Simple. 1 to 3.5. But if I was to be trading on that 1 hour time frame around here, this is a 1 to 1 ratio actually. One that is risk to reward 1 to 1. I'm risking $100 to make $100. But if I should refine it on this lower time frame, this is the next time I'm using because the rule states that you should put your eye on, you should put your stop loss on either the high or low that led to that break, to the breakout. So this is the high that led to this breakout. So this is where I'm going to be putting my stop loss. So I'm getting a 1 to 3 hour here. So understand this as simple as I've explained. I'm not even supposed to explain this. I wanted the assignment to be hard, but with this small explanation on this particular USD CHF, starting with the 1 hour time frame to the 30 minutes and the 5 minutes time frame, to be able to get a trade here. Remember, I said I wouldn't have used this. This is a bullish engulfing pattern. But why didn't I use this? Although this bearish candle is bigger, but for me to trade a bullish engulfing pattern very well, I need that engulfing candle to be at least 2 to 3 times the size of the candle it is engulfing. So this particular one is a no for me. Then this evening star here was a beautiful one, which is what I was looking for, which is something I would like to trade. And then you take it simple. Anyway, I don't know why I don't like this trade. So that's the assignment, and I'll be seeing you guys in the next class on Wednesday. So from now on, you should understand that the class is going to become more practical. Someone said it is difficult to follow up when I'm on the charts. Why is it so? Can you possibly change the color of your? It's a wedge. It's a wedge. It's a wedge. You can go to your chart and draw it by yourself and confirm if it is a wedge or not. Samino, where is this? Okay, the network is lagging. Is this what my stuff is showing? I thought I changed it. I changed it now. Hang on, let me see. I need to tell this tech team guys to work more on this because let me see something. What about this? Is this better? This particular one I'm using now. Just drop in the comments if this is better. This is it pink or orange? If it's better. Okay. Sorry, I just discovered it. In fact, I didn't just discover it. If you look here, you see that trading view. You see new. They just actually added it. It was not here before. So we'll start using this. We'll start using this. Really sorry, guys. We'll start using this from next one. All right. So I hope you got the assignment. I can't remember the pair I drew the assignment again on. Don't worry. I will just send it. I think I took a picture of it. I'll send it to the group. So I hope you got the assignment. I need you guys to be more practical. Trust me. I don't want you guys to go and disgrace me out there. I want to be proud of it because I want to make sure Nikhil 2.0, I need you guys to be, should I say, better than Nikhil 1.0 because I have some hidden or reserved information. You know, in this market, every day you learn. All right. We learn every day. And there are some things I've been able to learn between towards the ending of 2024 that I can only share with you guys. I can't call on my past student again and add all of them and say, I can't let me teach you guys again. It's impossible. It's my future students that will be learning it. And this 2025, the more I'm trading, the more things I learn on the charts, that one will be for 2026 students. But it's not that my strategy is going to change. No, there is still more things that can be discovered used on this simple chart pattern you're seeing. So there is still more things that can be discovered on simple chart patterns or simple candlesticks you see. So there are still more things to be discovered in the future. So sometimes I can be the one to see it. You self, the more you study this thing I'm teaching you, the more you will discover more things. If possible, something I don't even know at all about candlesticks, you will discover it by yourself and you add it to what you know. Which is why when I teach you chart patterns, I want you to go to the chart and start spotting them. In the process of you spotting chart patterns, you will now spot that, oh, even before chart patterns break out, it's likely retest around some key levels. Instead of me to wait for the breakout, I can just be cashing it at that key levels and follow it down to that breakout. This one, I discovered something like this in 2023 actually. Before a chart pattern is likely going to break out, check where it is going to react from. Whether it is head and shoulder or wedges, check where it's going to react from. It will likely react from a key level. So that one, the more you study, the more you identify it. You can now use the chart patterns as confirmation. So their assignment, I want to see it very, very important. On Wednesday, I will be treating you guys assignments while we talk more about top-down analysis, breaking down and trying to enter a trade using all we've taught. All right. I'll see you guys on Wednesday.